we have a proprietary fundamental factor model. It's 12 factors, 3 are qualitative and 9 are quantitative. And we go through there they are. The company has to pass a majority of those factors before we will even consider buying it. And so this is one I sent you, as you know, on CrowdStrike, and we did this analysis in February of 2024. You could argue we were early. We added the stock to our portfolios when they had the Delta, shut down airlines across the world,
Right.
bad blue screen day. We reassessed, and that's exactly what you're supposed to do. So is this management team still competent? Is the franchise value and market growth going to continue? And what is the future catalyst for outperformance after this trying time? And we reconfirmed that the company still met our metrics, the management handled it as well as you could have, and we added to our positions. Sometimes we reassess the fundamentals and we exit in the names, for example, like I mentioned earlier.
So that brings up a good point. What about the technical analysis? Does that factor in at all? I mean, CrowdStrike, got hit so hard on that day. And again, just as a reminder for folks, this was February 12th, 2024, where this analysis was done. So a little bit before that. But, if you see something happen, an event, and it really affects the price in a big way, is there any kind of technical analysis or sell stops or something like that where you're managing your risk in that way?
Yeah, well, yes, we do pay attention to technicals because in the short term, the algorithms in the hedge funds drive the volatility. And so if you're paying attention to the technicals, you can get much better entry points. The traditional value manager by instinct historically has said, oh, it went down, I'll buy more. And what I've learned over the 30 plus years I've been doing, 40 years I've been doing this, is that
I wasn't going to call you out on it.
sometimes you just need to, the opportunity cost is so big, you need to exit. And so we will do that. We don't have like a 25% stop loss in the portfolio, but we will reassess and then either add to the name or exit entirely. And that was our experience with CrowdStrike. We only had a modest entry level position, and so we added, and it's a bigger portion of our portfolio. And from the bottom, that was a great move. From where we bought it, the original shares, we're about even. But we've bought a lot more since then, so this holding has done well for us, despite the draconian problem.
Yeah. And so I also wanted to just kind of back up a little bit to share this graph that you shared with me, because this is CrowdStrike in terms of its relative price to sales ratio. So you kind of have these red lines that are identifying some targets. So how do you use this?
Yeah, so that bottom line should be green. I think it was just an oversight. I'm gonna go correct somebody after we're done. But you can see that based on its own history, even though it's not super long, CrowdStrike has been an expensive stock for sure. And even though on a PE multiple basis, it's expensive, if you look at it on relative price to sales ratio compared to its history, it is not. And so that was what gave us the courage to initiate and then to add more. And Palo Alto's our biggest holding in cyber, but this was a name we definitely wanted to own. So,
Well, now I'm looking at CrowdStrike and I'm looking at the dividend yield, and I'm seeing a big fat zero here.
Right.
So how does this, how do you use your 12 factors? How important is dividend yield? Are the 12 factors kind of treated equally, or can you fail some and it's okay? Or these are the non-starters? You fail this and it's a no-go.
No, you got to pass a majority. So you can fail on the quantitative. You can fail 4 if need be. And you can see we had an NA for dividend coverage, but a fail on relative PE because the relative PE is high. But we run a growth strategy, and that's does not have any yield requirements, and that's where this stock is held. In our dividend growth strategy, our equity income is really the official name. You can tell we're not marketing people; we're just portfolio managers. That's where we own where we focus intensely on relative dividend yields. But we're always looking at both metrics to confirm what we're seeing from one. And if we get attractiveness on both, then that's important to us.